Good day, everyone, and thank you for joining us for today's webcast. I'm Pablo Fuchs, editor of Globe Advisor at the Globe and Mail, and I'm pleased to be your moderator today. Before we get started, I would like to acknowledge that the land on which the Globe and Mail headquarters is situated is the traditional territory of the Wendat, the Anishinaabe, the Haudenosaunee, the Métis Nation, and Mississaugas of the Credit First Nation. We aren't anticipating any technical issues, but we appreciate your patience should any arise. If you need technical help, please click the help desk icon at the bottom of your screen. Today's webcast is on thematic ETFs. This discussion will provide a look at what makes them unique and the due diligence advisors should be taking when exploring these opportunities for their clients. On behalf of the Globe and Mail, I would like to recognize RBC iShares for supporting today's event. For those of you attending and seeking CE credits, we'll be opening up the chat later in the event for you to check in and note your attendance. I will let you know when the chat is open. We will also be taking audience questions during the last 10 minutes of the panel. So if you have any questions for our speakers, please submit them to the Q&A box. Now I'd like to introduce our panelist. Tiffany Zhang is a research analyst at the ETF Research and Strategy Group at National Bank. Mary Hagerman is a portfolio manager and investment advisor with the Mary Hagerman Group at Raymond James. Jeff Spiegel is the head of the U.S. Megatrend, International, and Sector ETFs for BlackRock. Benjamin Felix is portfolio manager and head of research at PWL Capital. Thank you all for joining us. Before we get started with questions to the panel, I'd like to get each of your definitions on thematic ETFs just to ensure that the audience is aware of what you're each referring to when we're delving into this topic further. Tiffany, let's start with you here.
Yeah, sure. Thank you very much, Pablo. We define thematic ETF as ETFs that capture trends and changes that are happening in the marketplace and in our society today that cannot be grouped using sector classification. Stocks under one theme usually cut across many different sectors, industries, and sometimes even geographies. So thematic ETF is a very broad umbrella that encompasses many different changes and trends. For example, we have technological innovation, we have changes in demographics that would require access to social media and infrastructure, and we have environmental changes that highlight the importance of clean energy and also natural resource. And thematic investing and thematic ETF is also not a new concept. The initial crop of thematic ETF focusing on water, on clean energy, and natural resource were launched in the early 2000s. Of course, new themes are being created and added to the universe as the markets and as technology and our society evolve.
Great, thanks. Jeff, let's turn it to you.
First of all, thanks so much for having BlackRock represented today. And just to build on Tiffany's comments, which I think are spot on, this idea of unconstrained access to growth is really what thematic ETFs are all about, that go anywhere geographically from a sector perspective. And Tiffany, I would actually say thematic investing goes back even further, right? So you were talking about thematic products, but active managers, stock pickers have done thematic investing for as long as there has been investing. One important distinction that we focus on at BlackRock is this distinction between thematic investing, any unconstrained approach to capturing a theme, as Tiffany was describing, and megatrend investing, which is specifically themes that are aligned with long-term structural growth themes. So at BlackRock, we've actually identified 5 of these sort of superhighways to the future. The first is technological breakthroughs. The second is demographics, aging populations. The third is urbanization around the world. The fourth, climate change. And the fifth, emerging global wealth, the rise of middle-class consumers. And so these areas we would describe as structural growth themes, even though some thematic investing and some thematic products might be cyclical.
Great, thanks. Mary, let's get your definition.
Yeah, so we just had a couple of great definitions. I'd add to that by saying I think thematic ETFs represent emerging trends that are long-term and durable. So just, it's not a fly-by-night concept that could disappear, but long-term investment trends that, similar to what Tiffany said, go above and beyond the sectors within the indexes. They could be, stocks that are in cross-sector, but above and beyond this sector. So could be niche types of ideas, but really I would add to the definition by saying long-term and durable and transformative.
Great, thanks, Marion. Let's conclude the definitions with Ben. Ben, what's your definition of thematic ETFs?
I would say that they're ETFs that invest in a specific sector or sectors that are tied together by a theme. And those themes are often, but not always, attention-grabbing themes, things that people are hearing a lot about.
Mm-hmm.
Terrific, thanks. So let's get to the questions. Tiffany, you and your team at National Bank do some very valuable work in tracking the developments of the ETF industry in North America, both in Canada and the US. Give us a sense of the current state of the ETF market and the prominence that these particular thematic ETFs play within it, and on both sides of the border and in Canada too, specifically.
Sure, yeah, absolutely. Thank you, Pablo. I can definitely start off with some facts and figures of the ETF industry for both Canada and the US. They've been growing at a really fast clip in the past decade. The last 2 years, especially, there were banner years of record-breaking inflows into ETFs. For example, in the US in 2021, it took in nearly $1 trillion of inflow. So now we have asset under management at around 6.5 trillion for US ETFs. And then for Canada last year, we welcomed $50 billion into ETFs, and we have AUM as of the end of April at $310 billion. So what we observe is that whenever there's volatility in the marketplace, ETF assets and ETF inflows tend to be really strong. And that's because money is sloshing around and investors are easily gravitated to instruments and vehicles that are easy to understand, easy to access, low in cost, and easy to trade. And among all of the new money created in ETFs, in the past 2 years, at least 60% of them have gone into equity. And then within the equity asset class, the flows are majority dominated by the low-cost market cap weighted beta ETFs. And it's really because this kind of beta core allocation are so extensively adopted in investors' portfolio, they can really set aside the satellite position of their portfolio to strategies that could either provide, some kind of equity market hedges using maybe option strategies or some alternative asset classes, or ETFs that could provide the differentiation and also, potentially above market returns. And that's where thematic ETF come into play. And it's because thematic ETF are usually used in the satellite position of the portfolio, so their overall asset is still relatively small compared to the ETF industry. In the US and in Canada, we have thematic ETF represent less than 2% of the overall ETF asset, but they are definitely the fastest growing category within the equity asset class. And so this year, we know it's a very rough year so far. For the S&P 500 index is the worst start to a year since the 1930s. So the inflows into ETFs and into thematic ETF definitely have slowed down a little bit compared to the frenzy of last year. But we are pretty much still taking in new money for both ETFs and for thematic ETFs. And we also see a lot of changes in leadership among different kind of thematic ETF, which I'm sure we could cover later in today's discussion.
Great, thanks, Tiffany. Jeff, you mentioned some of the big megatrends you're focused on, but RBC iShares, which is the partnership between your firm and RBC Global Asset Management, just launched 4 ETFs focused on these megatrends, namely technology, clean energy, healthcare, cybersecurity. Tell us why the organizations are so heavily committed to the thematic ETF space and why this approach to financial products is gaining favor compared to more traditional methods.
Absolutely. So, Tiffany really covered the growth in the space, which has been explosive in the United States, in Canada, also really around the world. So I think we can actually say this is the fastest growing category of ETFs globally. And when we think about it and the cases for its growth, I think there are a few. So one is the rise of investors wanting to think beyond traditional investment boundaries. So I think in all of the definitions you heard from us of what this category is, the consistent theme was this idea of being unconstrained, of cutting across sectors if necessary. Though, Ben, I appreciated you pointing out that some themes might be within a single sector, if that's what makes the most sense for a theme, right? So it's not that they have to be unconstrained across sectors, it's that you can go anywhere in the service of the theme. So we think that investors want more choice in this regard. Historically, traditional sector investments might have made the most sense or been the most popular, but we think that unconstrained approach is what investors are looking for today. And that's not just across sectors. There's actually a really important size component to all of this. So, for example, if you look at the S&P US S&P Technology Index, about 50% of that index is made up by just two names. Apple and Microsoft. And so one of the other issues with traditional sector investing is you tend to be dominated by the largest companies by their market cap. Whereas in thematic investing or megatrend investing that's offered by BlackRock and RBC, we're taking an approach that generally the largest name in these strategies will be something on the order of 4%, right? So you're also getting a much more diversified exposure, beta to the theme, rather than the fortunes of one or two or three companies that might be the largest holdings. So those are the tools we think investors are looking for. And the reason we launched 4, actually complementing 2 that we already had in market, 3, XCH, our China index, CIF, our global infrastructure index, and CWW, our water index, are long-standing. We think that those are exciting tools. We wanted to add to the palette. So we launched XClean, XCLN, which is the Global Clean Energy ETF, XDNA, our genomics and immunology strategy, and XHack, our cybersecurity strategy. But there was actually one more ETF that's really important in this lineup, and that's XEXP. So this is the iShares Exponential Technologies Index. And so one of the really important features, I think, to this further in the conversation of thematic investing is investors should not put all of their eggs in one basket. So I think one benefit of thematic investing, sort of to continue on why we're excited about this space, is that diversification across players, not just versus traditional cap-weighted benchmarks, but also single stock picking, right? You're getting more diversification from a thematic basket. We think investors should actually go further still and seek multiple themes in their portfolios. So XEXP is specifically designed to encompass all 5 of those megatrends I was talking about up front as a one-ticker solution. There's certainly the option is also available to use these building blocks to build your own sort of amalgamation of these themes. But a high concentration to a single theme, we think may not be the most thoughtful approach to portfolio construction.
Great, thanks, Jeff. And Mary, talking of diversification, you were a pioneer in the advisor community in making the move toward all ETF portfolios soon after the global financial crisis in 2008. In creating portfolios of ETFs for clients, where and how do you look for inspiration, and are thematic ETFs part of that process for you?
Yeah, well, for sure, for the past 15 years plus now, I've been working with the major distributors of ETF products, and we've seen more and more people come to market. So initially, I started out with portfolios that were just tracking the index, because that was my deception coming out of 2008, 2009, was that managed money hadn't done the job that investors were hoping it would do with regards to returns through the financial crisis. So I kind of went from passive indexing to looking at factor-based indices, incorporating sectors, and I had a very early interest in technology. So technology kind of led me to actually quite a few US-based alternatives, because where the technology companies are, especially in the US. And we were seeing, of course, over the years, more and more creation of different types of ETFs, because what essentially is an ETF, and as Tiffany mentioned earlier, people buy it for liquidity, low price, but essentially an ETF is a wrapper, and it will wrap anything that you want to buy that's liquid enough to be traded on an exchange. So with my interest in technology and then also ESG, I began looking at other types of products. New issuers came to market. Also, of course, there was the question of, do you want your ETF traded on the Canadian market, on the US market for tax reasons? What are your considerations in terms of the underlying exchange? So there were all these sort of factors to take into consideration, but that's a sort of a long answer to say that all of this evolution in the ETF space did lead me to thematic investing. Now, when I initially got into ESG, it was kind of considered a theme. And ESG, of course, as we know, is comprised of different types of strategies for putting together indices and filters. But there are the thematic elements of ESG that I find very interesting. So I go to the issuer, I do my due diligence, and I must say the companies, whether it be BlackRock, Vanguard, BMO, there's a whole host of companies putting out some excellent products, and they really do go the mile for doing the due diligence. So that's basically my approach and how I have come to integrate some ideas in my portfolios.
Great, thanks, Mary. And Ben, turning over to you, you've been more hesitant on thematic ETFs. Briefly take us through your position, the reasons for it, and from your perspective, what the best approach is for advisors and investors to gain exposure to some of these themes we've heard today.
Sure. So I tend to think that thematic ETFs are catering to a fundamental misunderstanding that investors have about expected stock returns, which is that economic growth and investment returns are positively related. The reality, and this is an empirical fact, and it's also true in the finance theory, is that economic growth and returns are somewhere between unrelated and negatively related. There are a couple of reasons for that. One is that high growth expectations for the highest growth sectors or themes, as we're talking about, are already reflected in high asset prices. So if a disruptive industry or megatrend ends up being as disruptive or as mega as the market currently expects it to be, you don't expect to earn excess returns because those high expectations were already in the price that you paid for the asset. Empirically, there's pretty good evidence and also theoretical from behavioral finance that there's pretty good evidence that investors tend to pay too much for expected growth in high growth segments of the market, which leads to low realized investment returns. I do think investors can use thematic ETFs to express informational beliefs that current market expectations are wrong and prices are too low, but that doesn't tend to be a winning bet most of the time. The other really important thing on this topic, I think, related to economic growth and returns, is that growth doesn't happen in a vacuum. In high growth themes, there tends to be lots of new equity issuance from both new and existing companies. So even if the earnings within a theme do grow a lot, as investors expect them to, earnings per share, which is what matters for stock returns, may not grow nearly as much as investors hoped because of earnings dilution. And then to contrast exciting themes, if you take older, boring, or declining industries and themes, investors tend to earn higher returns there. And I know that's counterintuitive, but it makes sense because they pay lower prices for lower expected growth, and there's less new equity issuance. And I have just a couple quick examples to illustrate that. They're fascinating and counterintuitive. If you take the rail industry from 1900 to 2021, railway stocks went from being 63% of the US market in 1900 to less than 1% in 2021. So declining industry, at least by market cap, but I think we can all appreciate rail is less important today than it was in 1900. Over that full period, railroad stocks beat the US market. They also beat trucking stocks and airline stocks since those industries emerged in the 20s and 30s. And then my last example, second example, is from 1971 until now, until April 2022. If we look at high tech as an industry and energy as an industry, in 1971, high tech was 10% of the US market, energy was 13%. Today, high tech is 34% of the US market, energy is 3%. So again, high tech exploded, as we all know, in a good way. And energy has declined in terms of its market capitalization. So I think we would all agree high tech has been a mega trend for the last 50 or so years. But interestingly, the energy industry portfolio in terms of stock returns beats high tech over that full period. So I know I'm a bit of a skunk at the garden party here because we're talking about thematic ETFs, but I actually think underweighting or eliminating the types of securities that tend to be in thematic portfolios is the best investment approach for those types of securities.
Thanks for your perspective. Tiffany, I want to turn it back over to you here. When the topic of thematics comes up, want to get a sense of, in terms of, from your perspective, what are the specific themes that are getting attention and those that may be out of favor? And is it advisors who are driving this? Is it investors? Is it both? What does the data tell us from an influence perspective in terms of who's driving this and where it's all going?
Yeah, such great questions, Pablo. We definitely see a lot of changes in leadership among different kind of themes. In the past 2 years, investors were mostly interested in long duration, disruptive innovation technology related themes. And we saw investors flock to ARK Family of Funds by Cathie Wood and related themes such as cloud computing, electric vehicle, and blockchain technologies. For example, in 2020, if you look at the top 10 thematic ETF inflow in the US during that year, 5 out of the top 10 ETFs were from ARK ETFs. But this year, the market really is going through a regime shift where the focus, instead of growth, now is focused on value and on inflation. And so energy is really the best performing sector in both Canada and the US this year. And there's really a lot of changes in the flows into thematic ETFs because of this shift in market sentiment. For example, we see strong inflows into natural resource thematic ETF. This is kind of thematic ETF that includes energy, mining, and agricultural stocks in the portfolio. So it checks a lot of boxes for investors who are looking for inflation hedge. And year to date, this group of ETF actually has, on average, positive return of around 10%. And another area we also saw inflow into is agriculture ETF itself. And this category of thematic ETF includes stocks in fertilizers, in agricultural equipment, and also the production of grains and packaged food. So also strong interest and inflows into this category. We also saw a Russian invasion of Ukraine acted as an accelerant for the inflows into both natural resource and agriculture ETF. It's it's a really sad event for people living there and going through all of this suffering. But the Russian invasion really rattled the global energy and agricultural markets and drove up prices in grains, in natural gas, and in crude oil. So definitely a lot of interest into these themes after the Russian invasion. And another area that got tons of investor interest after the Russian invasion was the cybersecurity ETF, as there were a lot of concerns about potential of a cybercrime from Russia after it was sanctioned. So yeah, just to recap, this year, a lot of changes. But if you look at the top 10 thematic ETF inflow in the US, 5 out of the 10 are related to agriculture and natural resource. And then 2 are related to cybersecurity. And then for the broad innovation theme, surprisingly, they are overall still gathering inflows, even though performance-wise, they are not doing really well. For example, the ARKK ETF, the flagship ETF from Cathie Wood ARK Invest, is gathering inflows every month in 2022. And also, Pablo, you had a question about the division between the retail individual investors and also advisors. I think the data here is actually a little bit difficult to tease out because unlike mutual funds, ETFs do not remain a book of record. So we really cannot see who is actually buying or selling. But that's also one of the reasons why ETF is so low in cost. And we know from investor economics that they are actually doing a lot of really deep dive research using their proprietary data on this subject. And their research shows for the overall Canadian ETF industry, the division between institutional investor, and the advisors, and then the discount individual investor is roughly 1/3 for each, with the individual investor being the smallest pie among the three. And for a particular group of ETF or for a particular ticker, it's really hard to come by. But maybe I could offer some anecdotal evidence based on our conversation with our advisors. We believe advisor definitely is integral part in the adoption of thematic ETFs. We get questions from our advisors very often on this kind of ETFs. For example, recently we have been fielding questions regarding, agricultural technology such as vertical farming. We have questions regarding robotics, water, and ARKK. So it's a wide range of interest from them.
That's really interesting. Thanks, Tiffany. Jeff, just want to stem from that a little bit, and you've heard from Tiffany in terms of both short-term and long-term perspectives, as well as what how the market changes and specific themes can really take off in a specific period of time. So give us some insights into the process that asset managers go through in selecting these themes to invest in, and what factors are taken into consideration. How do you consider the short and the long-term interest and the performance when making these decisions?
So up at the top, I had sort of drawn what I think is this important distinction between megatrends as a subset of broader thematic investing. So at BlackRock, when we're asking the question of what is a megatrend, it has to align with one of those 5 areas that I was just talking about. So I'll give you an example. Within demographics, over the next decade, a little bit less now, the number of grandparents in the United States will outstrip the number of grandchildren for the first time in U.S. history. And just a few years after that, the same phenomenon will actually be true all around the world. So that's the megatrend that we're starting with on the demographics front. What do we see as some important consequences of that? Well, one is significantly more spending on healthcare, trillions of dollars more by our estimates. And as a result of that, more and more investment in medical breakthrough technology to service this aging population. So that's an idea of a megatrend. Then when we would go a deeper level, we would spend time across BlackRock, and this is always a global effort across active and index businesses, to assess what are the themes that are most likely to benefit from this. One we've identified in this regard is genomics and immunology, represented in our Canada lineup as xDNA. And here, question 1, do we think this theme is truly aligned with the megatrend, this aging population? Yes. And question 2, do we truly believe that there is progress or innovation to be had in this space? And again, the answer is yes. We've seen this leap forward with mRNA vaccines deployed against COVID, now extending rapidly to HIV, influenza, and a variety of other areas. So that's sort of how we start in identifying themes to be associated with the megatrends. And then we think about, last and somewhat most importantly, can we actually deliver beta to this theme, right? So there might be a particular theme that we think is really exciting, it's really connected to our megatrends, but we're not going to bring it to market unless we think that there's a basket of pure play companies that we can put together that should provide that thematic beta, so that if the theme rises, or frankly, if the theme falls, the ETF should track alongside of it. And then just to go back to what Tiffany was talking about in terms of flows and investor behavior, one of the things I think is really interesting between this sort of short-term and long-term performance question is we generally talk about using these themes as long-term outperformance opportunities rather than short-term tactical, but we totally recognize that many investors will use them tactically and should if they want to express that particular conviction. But we think that our belief about the right use case has been borne out by investor behavior, in that you have seen tremendous performance of a lot of these strategies in 2019, 2020, and 2021. Then you've seen obviously a significant pullback here in 2022. And yet, and you heard this from Tiffany, flows have largely been flat to slightly negative to slightly positive for the year in thematic ETFs. And what that tells us is you actually have a little bit less performance chasing sort of hot money in and out of these themes than had been reported during the run-up. So we think that means investors are more focused on the long-term performance of these themes, and I would say that's our thinking as well when we bring them to market.
Great, thanks, Jeff. Mary, one of the challenges for any advisor who's looking to add thematic ETF exposure to client portfolios is deciding on the themes first, and then once you've done that, choosing among the many funds covering that specific space. We've known there's been a great growth in thematic ETFs recently. So what process do you go through in choosing the fund to track it? Do you go with companies with whom you already do business? You look at how fund companies may define a specific theme, the composition, fees, what other factors, and what are your recommendations for advisors going through that process in terms of choosing a theme and then choosing a fund?
Yeah, right. Well, it's a great question. I think it's important to divide up the advisor community because there's discretionary portfolio managers, which is what I am, and there's advisors who aren't discretionary and could be on the responding level for clients who are interested in thematic funds, right? Thematic ETFs. I mean, in that case, there's a dialogue, there's research, but I'll speak to the discretionary manager who decides that a thematic play is beneficial to the portfolio and the client's return over time. Well, we're accountable for those decisions, right? And we don't necessarily have to ask the client if he agrees that cybersecurity, clean tech, robotics will be big in the next 6 months, year. But certainly if it isn't, we have to respond to the fact that it hasn't performed well in the portfolio. So you have to do your homework. And I wanted to share a little anecdote. I was actually on a Globe and Mail investor panel in Montreal a few years ago when cannabis was legalized, the day that cannabis was legalized. And there were people everywhere in the streets. And we weren't really, because it was downtown, we weren't really talking about cannabis on the panel. But in hindsight, that turned out to be the best day to sell your cannabis stocks because they went down quite substantially after that. So as a portfolio manager, before I get into thematic, and we know that a lot of thematic ideas, a lot of, as Jeff said, these products are being created. Is it push? Is it pull? Are they being created because there's a lot of advisor demand? Or are they being created because we see long-term potential for growth for clients? I was listening to a presentation on an ETF on the metaverse this week, and I find the metaverse fascinating. But the presentation also included the disclaimer that it could be years, if not decades, before we make any money with this. And I think that's fair. That's fair. It's a great idea. But this all comes back to, so what's a portfolio manager supposed to do? We have the right to our convictions. We do the best that we feel. We do what we feel is best for the client and the best to obtain returns over time. So my message is, do your homework. These ETFs are traditionally more volatile. Normally, they would be a small sleeve of your portfolio. You should compare these products, and I think we'll be talking about that later on, but you should compare them with what you're already holding in your portfolio. And certainly, if you're a financial advisor or portfolio manager who has ETF-based portfolios, there's going to be a lot of intersection of stocks, right? So it's important to have conviction. That's what we're paid for. Right? We're paid to have an opinion on where the market's going to go, how we can make money for our clients, and take them there. So I'm not necessarily going to criticize someone's opinion on a thematic play that he or she wants to put in their portfolio, but you have to do your homework. You have to have the conviction, and the client has to understand why you're picking that thematic investment.
Thank you, Mary. Ben, Mary mentioned there in terms of cannabis and, of course, the metaverse, some interesting points that I want to go into a little bit here with you. And one of the criticisms lobbied at thematic ETFs was highlighted in a recent academic report, which found that the funds tend to launch just after the peak of the theme and immediately before a steep fall in returns. So similar there to cannabis, what Mary was referring. However, proponents usually point to the fact that it could take years or even decades for some of these themes to become entrenched and fully deliver on their promise. Alternative energy, electric cars, robotics, metaverses, as Mary just pointed out, some examples. How do advisors and investors reconcile these perspectives?
Yeah, so I think I'll start just quickly highlighting the paper that you mentioned. It's a very good paper, and it's directly applicable to the discussion that we're having today. The title of the paper is Competition for Attention in the ETF Space. So they looked at all of the specialized ETFs is what they call them, but they're effectively thematic ETFs from 1993 to 2019. And they found that portfolio achieved risk-adjusted returns of negative 3.1% per year after fees. They found in the paper that most of that was driven by the post-launch performance. So in the first 5 years after a new thematic fund is launched, they lose about 6% per year in risk-adjusted terms, which speaks, I think, exactly to the anecdote that Mary talked about. And the authors of the paper, this speaks to another comment that Mary made. The authors of this paper suggest that fund providers cater to investors' extrapolative beliefs by issuing specialized ETFs that track attention-grabbing themes, but the problem for investors is that by the time the ETF enters the market, the securities in the theme have already reached their valuation peak. So it's like the product gets launched at peak excitement, and asset prices tend to fall after that, which explains the negative realized returns. Now, to answer your question, I don't know whether it matters that these are long-term economic bets. As I mentioned earlier in our conversation, economic growth and investment returns are somewhere between unrelated and negatively related. What matters is the price that investors pay for future cash flows. All else equal, cheaper stocks have higher expected returns. The less you pay for future cash flows, the more you expect to earn in returns. If you want higher expected returns, the time to invest in themes or sectors is when they're cheap. Like my railroads example earlier kind of speaks to that, I guess. And then even beyond that, industry sectors and themes are not priced risks, which means that there's no expected benefit from investing in one over another, but you are taking on sector-specific risk. And that's kind of the theme beta that I think Jeff touched on earlier. That thematic beta is unlike the market's expected return, which is positive. The thematic beta is much more speculative. It's a different animal. Now that can work out in your favor, of course, as we did see with ARC up until the end of last year, but it's a random outcome. And I personally, like Mary talked about being a portfolio manager, when I'm doing my fiduciary duty, acting in the best interest of clients, I wouldn't tend to bank on that type of speculation personally. It really is a gamble. Now, if you want to own cheap stocks, I don't think there's any reason to concentrate on one theme. If you want to own cheap stocks, you should be diversified across all sectors and all themes and focus on relative price, which is what matters for expected returns.
Thanks, Ben. I want to focus a little bit on investment styles here. And Tiffany, when we're talking about thematic ETFs, they're seen by many as baskets of repackaged growth stocks. And it's clear why when we're looking at some of the themes that we've been discussing. Yet with value investing, as you pointed out earlier, making a comeback, are we seeing or do we expect to see more thematic ETFs adopting that style and or launching with a focus on value?
I think it's absolutely correct, Pablo, to say that thematic ETF, they have really a lot of growth factor too, because essentially they are just trying to capture some long-term growth opportunities. But of course, among different kind of themes, the valuation metrics will be in a very wide range. I think both Mary and Ben talk about the valuation and about thematic ETFs. So just from our observation, we think that themes that include more mature companies or companies that have more tangible assets on their books will tend to be less impacted by the hype cycle of investors, which sometimes could drive valuations beyond reasonable range. And then themes that include, maybe more new and emerging type of stocks that tend to catch the imaginations of investors will be more impacted by the swings of valuation from, the investor psychology changes or market changes. And also one thing I think that's important to realize is that valuation is very fluid. It changes with the market. And growth stock could become value stock after a significant sell-off. For example, I've already seen articles about like how Facebook is trading at valuations lower than the average value stock after the recent drop in prices. And in terms of new launches focusing on value, I don't see that. But one trend I do see in the new launches is that there's more actively managed thematic ETF that's coming into the markets. I think it's important to realize that even with the index tracking thematic ETF, there is a lot of active decision involved, right? So for example, what are the sub-themes to include and what are the keywords to use when running the natural language processing programs on? So these are a lot of the active decisions that index provider and the fund managers have to make on an ongoing basis. But then with the actively managed thematic ETF, maybe the PM will have more discretion to actually look at the valuation of stocks and make their judgment calls and select the ones that have more value factor tilting. That's definitely something that we'll be watching going forward. Interesting area.
Great, thanks, Tiffany. That's very interesting. Want to turn it over to Mary here. And one of the benefits of these types of ETFs is that they usually contain established players in addition to riskier names, and thereby reducing the overall risk while providing exposure to various potential winners. However, having some of those larger names could lead to duplication in holdings with other ETFs that track larger indexes or other themes. How can advisors avoid that overlap or over-concentration in specific stocks while choosing these types of products?
Right. Well, that's a great question. And once again, it comes back to looking under the hood. So you have to have tools to be able to analyze your portfolio. There's several tools out there, whether it be through some companies like Vanguard, McKinsey, iShares will help you analyze your portfolio. Morningstar has great software, but you can combine your positions to see what your top holdings are. Now, don't forget that maybe some people do want to overweight, like they don't have a problem with that because they are looking for an enhanced exposure in a certain sector, or, they have a belief. And don't forget too, that I think that part of the reason why we're seeing this growth in thematic ETFs is to a bit be the sort of corollary of what Ben has said, is that people are interested in what's happening. I mean, the world is changing. We have so much stuff going on that we would never have dreamed about 5 years ago, let alone for some things a year ago, right? And people want to get in on that, but they sort of want to dip their toe in the water. And having an ETF strategy provides them with the diversification that allows them to enhance their portfolios with ideas that they believe in, that they have conviction in, which gives momentum to the portfolio in areas that they think will outperform over time. And sometimes, quite honestly, the fact that things overlap is not a big deal, right? But it's just a question of you're diversifying, but within your diversification, you can have concentration. If you're okay with it, that's fine. If you're not, then, and this is where, if you don't have a 100% ETF portfolio, you might be able to have, perhaps you have stocks that are reproduced in your thematic ETF that you can sell so that you bring things more back into balance. But it should definitely be considered, and you should understand how the ETF is built, if it's managed or not, because the stocks that you're looking at or comparing to your broad-based index or your portfolio of stocks might change from one quarter to another. So, I mean, there's just no getting around the fact that you have to do your homework. But fortunately, the industry has given us some really good tools to do that.
Great. Thanks a lot, Mary. Before we continue with our questions, want to advise you all that if you're looking for CE credits, make sure to type in your name and I believe, sorry, say yes in the live chat for accreditation. So please go ahead and do that if you're seeking CE credits. Ben, while you're generally not in favor of these products, in which circumstances would they make sense, if at all? And for advisors who are considering adding them to the client portfolios, what due diligence should they be conducting to ensure they're in line with clients' risk tolerance, expectations, et cetera?
I think Mary really hit the nail on the head here. The most important thing for advisors to help their clients understand is what they're actually buying. A lot of these ETFs have very cool names, but what's under the hood is what really matters. There are different ways to think about that. Generally, using risk factor models, which are kind of a thing in academic finance, maybe a little bit also in practitioner world, but kind of less so. But it's really company size, relative price, profitability. Those are the big factors that explain differences in expected returns between diversified portfolios. It's not economic growth, themes, or trends. So in the case of thematic ETFs, different themes might have different characteristics. Two themes might look very different from the perspective of relative price or company size or profitability. So I think we have to understand what's under the hood. And I also think we have to understand that if a client wants exposure to characteristics, which are what drive returns, I would question whether a thematic ETF is the best way to get there. One of the characteristics that thematic funds tend to have is higher fees, which is completely justified given that they're giving access to a specific theme. I understand that and it makes sense. But if you look at US equity from iShares, for example, you can buy the US market for 3 basis points. Or if you want small cap value stocks, you can get it for 20 basis points. If you look at the average US equity thematic ETF from iShares, are 42 basis points. So the costs are unquestionably higher. They'll also tend to have higher internal costs like turnover and transaction costs. Now, if a client wants to express a belief about a specific theme, meaning they think they have more information than the market, I think it's important to communicate that those bets don't tend to work out, and that's particularly true in thematics. And that statement is based on another paper called Betting Against Quant, examining the factor exposures of thematic indexes. And this is a paper that looked at a couple of major thematic index providers, and they find that thematic indexes tend to hold small cap growth stocks with weak profitability and aggressive asset growth. And that basket of characteristics tends to be related to stocks that have lottery-like characteristics, meaning that investing in those types of stocks, you tend to have poor returns most of the time, but sometimes you can have really, really good returns, just like playing the lottery. So the odds are kind of stacked against you, but hey, you might win big. And maybe that's what people are going for when they invest in these things. And if they are, then that's exactly what you're going to get. So I want to echo something that I think both Jeff and Mary have said, which is that if someone wants to express an informational belief, I think it's important to give them all the information that I just talked about. But if they want to do it still, I think that using a thematic ETF is a far better way to do it than using individual securities.
Great, thanks a lot for that, Ben. And just before we continue, just with another question before we go to the audience questions, my colleague just asked me to remind once again that if you're in the audience and if you're planning to obtain CE credits for the event, the chat is now open, and we'll need you to check in by typing yes into the live chat so we can make note of your attendance for CE credits. Jeff, we heard there from Tiffany about the growth in active, and so one of the things I want to ask you is in terms of the process that a company like BlackRock goes through when selecting a benchmark or creating an index for its funds, and thematic funds in particular. Furthermore, how are the securities selected to ensure they deliver strong, stable returns for the long term and not just looking back at the historically strong performance?
Sure. So maybe there's 3 things I'm going to try and address in this question. One is sort of the discussion you've heard throughout this conversation, efficient markets, growth, value. The second is, and I think we've also touched on this through the conversation, how do you think about fitting these into a portfolio? And then the third, how exactly do you construct them? Because two index ETFs that might have the exact same name of a theme in how they're marketed may perform actually very differently from one another. So let me start with the first point. I think we're finally back, Ben, in this sort of age-old discussion of value versus growth, right? So for the last, 8 to 10 years, it's been sort of the growth bulls who have been winning the fight. If you look 10 years before that, it was the value folks. It's going to be very tough to say who's going to pull ahead over the next 10 years, though year to date, value has absolutely been the stronger of the plays. So I do think, and you said it in sort of the end of the last question, you express your conviction with these strategies. At BlackRock, our conviction for these strategies and megatrends is that we see long-term growth potential, but the fact that some investors don't is frankly what makes markets. And so we think that's completely healthy. And it's frankly exactly how it should be. To the second point about where these fit in your portfolios, another thing I really think you hit the nail on the head, Ben, is some of these strategies do have similar characteristics when it comes to the growth value tilt, when it comes to size, sometimes when it comes to geography. And so from a portfolio construction perspective, we would argue that you want to neutralize all of that, right? So if you are expressing your conviction, if you believe that a theme is going to grow, whether it's over a 1, 3, 5, or 10-year period, thoughtfully integrating that to your portfolio is critical. And so if you know that there's more of a small cap tilt or a growth tilt to these strategies, it's easy actually to neutralize that by reducing your small cap tilt or your growth tilt within the starting portfolio so that those factors effectively stay in line and you're taking security specific risk by adding these thematic ETFs, which is very much how we would encourage investors to prosecute that. And then the third, for how we actually build the funds, Tiffany, you were talking about how more active managers are getting into this space. We're fond of saying at BlackRock, as the largest indexer in the world, index investing is anything but passive. And I think that's especially true when you talk about thematic investing. So, Pablo, to get back to your question, we use a number of sophisticated techniques to select securities in these strategies. Those can be big data driven processes where we're looking at very granular revenue data, sometimes supply chain and keyword analysis, or as in the case of EXP, which I sort of mentioned as one of our flagship offerings, we're actually using human insights. So in that case, you have Morningstar's fundamental research analysts rating companies. The difference, though, is that probably sounds pretty darn active to everyone on this call. The rating for those companies isn't about whether that company is set to outperform or underperform or how its balance sheet or cash flows look. It's actually much more a question of, are they economically exposed to the theme? And so that's really critical, as is what I talked about up top, this idea that you don't want to take concentrated risk to just a few names. You want to have a broad basket of securities so that if you're right, and if the theme does grow over time, it's not the fortunes of 1 or 2 companies that are really going to drive the outcome. So just to sort of recap all that real quick, the growth value debate is once again alive and well. From a portfolio perspective, we have to be really thoughtful about neutralizing those sort of specific risks that are asset class level or factor level, and would super encourage investors to look under the hood and make sure that the securities selected in their thematic basket are diversified, and most importantly, pure play on a theme.
Great, thanks a lot, Jeff. And so now we've gotten to the point of the conversation where we've been collecting questions from our virtual audience, and let's set aside some few minutes here to answer those. Mary, we have a question from someone in our audience here that asks, what does the average retail client misunderstand about thematic ETFs, and how do you walk them through those misunderstandings?
What does the average retail client misunderstand? I would think, once again, I'm a discretionary portfolio manager, so I go at it from I decide, then I educate, right? I think quite possibly, depending on the theme, it could start from something being as basic as the theme itself and the risks related to the theme over time. Then once again, when you pull apart your product, how is it built? How do you take, what stocks are in the theme? And if the theme isn't working out, why? To be able to explain that, because the retail investor is not necessarily going to understand, okay, we're having a market pullback, but why is my robotics, going going south, other than the fact that the market's going south. Why is it going south worse? Well, then you have to start picking apart your product. But I think this is a very easy space for the retail investor to get very emotional, right? And to get emotional on quite possibly ideas or thoughts or projections that aren't necessarily true, right? So that's where it takes, appropriate explaining. And why I appreciate being a discretionary manager is only products that I can explain get into my portfolio. When you're taking an order for a client, you have to learn about the product, right? So if it's not an ETF that you've been holding, you have to find out why. But I think there's been so much creation of product in this space that it can be confusing for an investor just within the technology space to figure out why an iCloud ETF is so different from a cyber, so that would be my answer.
Sounds great. Tiffany, a question for you here. Can you give us some specific examples of agriculture and natural resource ETFs in Canada?
So I know iShares in Canada, we have the COW ETF, that is the agriculture ETF for it's a global exposure, unconstrained. So that's one of the tickers. I'm not sure. I don't think there's a natural resource ETF in Canada, but there's definitely several in the US for, I think, iShares also has one, and also I believe the GUR and also GNR are some of the tickers listed in the US, are some of the largest ones, and they have some of the longest track record out there as well. And each of these different ETF is actually very different. For example, even with the agriculture ETF, if you look at the US listed ones, so the COW is actually listed in Canada, but if you look at the US listed ones, there's more products out there. And if you look at their year-to-date returns, some of them are positive or flat on the year, and then some of them are negative. And what's the reason for that? It's actually because that particular ETF is actively managed, and then the portfolio manager doesn't include a lot of the fertilizer section or industry in the portfolio. And then fertilizer is actually one of the huge beneficiaries after the Russian invasion of Ukraine. The stocks in that particular industry is doing extremely well. But by avoiding or underweighting that particular industry, that particular agriculture ETF is actually not doing really well. So I think, like everyone mentioned on the panel, you really have to lift the hood and look at the industry exposure, the regional exposure of this ETF, and understand their differences in portfolio construction, because that could mean really your result from investing them will be very different.
Great, thanks, Tiffany. And a final question here for Jeff is looking at BlackRock's huge business, largest asset manager in the world. How big of a part of the business do you expect thematic ETFs to be in the years ahead? And what are some of the areas that you haven't explored within these bigger megatrends that you're thinking about?
We think it can be significantly bigger. So we play around with internal estimates at the firm, but we think 5x growth over the next 5 to 10 years is far from out of the question. Again, I think some of it will come down to the performance over that time period. A lot of what Ben and I were talking about earlier in the discussion, because market movement will obviously play a role in that. But the popularity of the category does feel like it'll continue. And as I said, it's super encouraging and I think telling that we haven't seen outflows despite a really tough start of the year for performance in the category. In terms of what's next, I think one of the spaces that we've seen so much proliferation is in traditional technology, or not traditional technology, actually technology broadly, often innovative technology. And so I think what you'll see in thematic investing is a much broadening out of what sectors are going to be represented and what types of investments. So I think on the technology side, 2019, 2020 in particular was themes like cybersecurity and robotics and artificial intelligence that did particularly well from an asset gathering perspective as well as a performance one. If you fast forward to 2021, suddenly it was infrastructure, it was clean energy, to some extent self-driving and electric vehicles. So that broadening is really important. And so some of the places that you'll see a lot more investment from us are on the climate side and the medical sides of innovation. So I think the future holds a much broader way of thinking about thematics and this move away from the idea that, it's all about tech.
Great. Thanks for that answer. We unfortunately have to leave it there. On behalf of the Globe and Mail, I would like to thank Jeff, Mary, Ben, and Tiffany for joining us today and for providing all those valuable insights. I would also like to thank everyone in the audience for attending and for all the great questions. And of course, special thanks to RBC iShares for supporting today's webcast. Thank you again, everyone, and enjoy your day.